Thank you, as promised, to Simon Mariner at St George. Simon, interesting to see overnight the financials providing some support on the Dow, although some commentary saying, look, it's a difficult situation to decipher the top tier from the bottom tier. You can trade and make money, but no one's really seen a drastic change in the fundamentals.
Yeah, very interesting night in share markets overnight. The Dow obviously ending a little bit higher. In terms of financials, we did hear from AIG, perhaps the world's largest insurer. They did comment on the fact that they intend to start repaying some of the bailout money, so that was certainly positive and lifted and tried to support the markets. Gains were slightly tempered in the US after a report that initial jobless claims did rise, although we did see some data about manufacturing activity improving. So all in all, yeah, positive night in US share markets. Asian share markets having a stellar session. Most major indices up across the board in Asia.
We'll get onto Asia in a moment, but AIG not just paying back TARP money, but the chief exec talking about potentially selling parts of the company. Why would shareholders like that?
Well, I think it's really just, reinforcing this confidence, this upbeat, this optimistic view of that the future does certainly look rosy there. Certainly US indicators also showing a little bit of the same. We saw the leading indicator, which is a measure of economic activity there, that rose for the fourth month in a row. We also saw obviously the Philadelphia Fed index, which gives us an idea about manufacturing activity. That surprised to the upside for the first time in almost over a year. So certainly both those pieces of data together do reinforce and support the view that the US economy as a whole may be at a bit of a turning point. Looking back at the UK, if I may, back in Blighty we had some retail sales figures that did surprise to the upside, although government borrowing there substantially increased, perhaps due to tax receipts perhaps falling due to the recession there. But retail sales twice as high as expected. So again, maybe a little bit of a glimmer of hope on the horizon there in Europe.
Yeah, Simon, but they've been heavily discounting.
Certainly have. But look, I suppose it shows that people are going out and sticking their hand in the pocket and supporting the retail business there.
Is that profitability long term if you're slashing and burning on price?
Look, I think that's a great point and a good question. And really, all we can do is sort of stand by and keep looking at what happens going forward.
All right, okay, let's also ponder this China equation. Really, it's taking a lot of people's interest for obvious reasons, but the swings are so difficult to come to grips with. One day, a 4% rise, the next a 4% decline. How do you come to grips with that?
Well, look, it is tricky, and certainly, when we talk about the Aussie dollar being a bit of a barometer for risk, or another way of saying that is, a barometer for optimism in the world. You look at the volatility we've seen in the Aussie dollar, it does seem to be a little bit range-bound at the moment, interestingly. It doesn't want to move, it seems, above 83.4 US cents, so there's a little bit of indecisiveness there. The house view here is that we do expect for that to push higher as conditions globally do improve, the appetite for risk does improve, but certainly, as you mentioned, volatility is very high.
Fundamentally, Simon, what do investors want to see from the Chinese government? Do they want to see oversight? Do they want to see some move into that market to shore up what's been very free and easy lending, arguably, of late? Or do they want to pull back and a belief that the government won't be interventionist?
Well, it's interesting talking about interventionists. We've just had you could argue, a $50 billion stimulus to the Chinese economy. Energy is certainly the flavour of the week with the Exxon Mobil deal with PetroChina. But oil, very interesting. I found myself looking at oil very closely this week. Certainly just a little bit higher overnight. Oil's a big factor. We had the IMF just revising its forecast for next year. They do see a 1.4% contraction, perhaps, in the supply of oil. Very important for a big manufacturing nation like China, obviously. And if you couple that together with the view that perhaps we're going to see economic activity improving throughout 2010, a little bit of economic growth coming onto the global plateau, well, that does only sort of further support the fact that we're going to see oil prices start to rise as well.
So where would you see the next key support on that front?
Oh, look, it's tricky. I suppose the jury's still out on the charts on that. But, you know, oil, a big one. You know, I was reading it might be sort of surprising to a lot of viewers. US still a massive consumer of oil. They consume about 23% or, you know, nearly a quarter of the world's supply of oil. They do produce some. They produce about a tenth of the world's oil, or a little bit less, in fact. China, you know, obviously we do associate with this big manufacturing powerhouse. They only consume less than 10% of the world's oil and produce just on 5% there. So that's interesting. The other interesting thing on the oil front is that we've had this interesting scheme in the US just recently called Cash for Clunkers, which is where people can trade in cars or get a bit of a bonus or incentive on trading up from cars over a certain age. They can get up to about $4,500, and it's no small thing. About 500,000 people have participated in that scheme, and there's about $1.9 billion injected into the economy there. So, you know, oil, cars, and certainly the US still remain a big consumer there.
Yeah, and that asset depreciates the moment you drive it off the showroom floor.
Certainly does, yes.
It seems like motivation in the pits is kind of just on a knife edge. They try to push it above that all-time 10-month high that we saw back on June the 11th of 72.68 a barrel. It doesn't quite get there. What will be the push above that?
Oh, look, I'm not sure. Certainly the reports from the IMF on a contraction in the supply. We saw that earlier this week as well, just on some US producers coming out and reporting that perhaps supply is going to contract a little bit. So it's certainly a bit of a supply and demand tussle, and that's really going to perhaps determine the price going forward. But as I said, we do expect there to be pressure for that to move higher as, you know, the global economic outlook improves.
Aussie dollar moving higher, punching above 83 cents. A good play when commodities stabilise overnight.
Yeah, and again, a commodity currency as well as a barometer for risk. So it'll be interesting to watch that through this session. Looking forward to today as well. We've got no data here in Australia, so nothing really to steer sentiment, you know, either for the Aussie dollar or for share markets here. Although, as you mentioned earlier, we've seen plenty of synchronisation with share markets. We have a tendency to follow or continue the lead that we've seen from offshore markets. Asian markets in particular last night having a really good run, so perhaps expecting a little bit more of the same here in Australia. Tonight in the US, on the radar, major data-wise, we've got existing home sales. That's about it. But we've also got an address from Mr. Bernanke. He's going to be talking about, I've got the title here, Reflections on a Year in Crisis. So that should make for an interesting speech, although unfortunately he's not going to open the floor up to any Q&A afterwards, so we can't gain any additional insights there.
Very interesting, Simon. As always, really good to have you with us. Appreciate those insights. Have a great weekend.
You too. Thank you.
Right. Simon Mariner there from St George. I want to tell you about Duet Group reporting a $62 million annual loss. That is down steeply from a $52 million profit in the previous year. Now, the electricity transmission